Hey guys, I'm Ali from FX Scouts. So most trading days start with a burst of energy. Volatility spikes, orders hit the market, and institutions adjust their positions. This is the best time to enter the market. And this is what the ORB or Opening Range Breakout trading strategy is based on. In a previous video, I spoke at length about the ORB, and I spoke about different triggers. I spoke about its setup and then entries and various exits that you can use. But in this video, I'm going to address some of the questions we had around the ORB. Many traders were asking about the NR7, and they were asking about different filters that you can use to make this strategy even more powerful. And this is what I'm going to talk about in this video. Please stay tuned to the end and remember to subscribe to the channel if you haven't already. Just a reminder that forex trading is risky and that most traders lose money. This video is for educational purposes only. So as you know, the opening range is the first 15 to 30 minutes after a significant market opens. This means it could be the London, the Asian, or the New York Stock Exchange. Why does it matter? Well, this range often signals the initial battle between the buyers and the sellers, and depending on who wins, it sets the tone for the rest of the trading day. And once that range has broken, especially on high volume, it shows that one side has gained control. It also means that as long as it's not a ranging day, that the market has gained momentum. But here's the catch. The ORB does not work every single day. Most traders fail because they use the ORB on the wrong days or they're not applying any filters. So in this video, that's exactly what I'm going to show you. I'm going to show you a few different filters that really help you capture the right trading days for the ORB. Before we get started, I just want to quickly go over how the ORB works again for traders who may be unaware. So the ORB is based on a powerful concept. The early part of the session often sets the tone for the rest of the day. And here's the basic process. So at the session open, mark the high and low of the first 15 or 30 minutes, and this is your opening range. You'll place alerts or bracket orders just outside that range. If the price breaks out of the range and holds, you take the trade, long above or short below. And the assumption is that this may indicate sustained momentum that is fueled by institutional order flow, reactions to overnight or pre-market news, position unwinding, and day traders jumping in on the breakout. But as we know, not all breakouts are created equal. Some are fake outs and others just go nowhere. And that's exactly why we use filters. The first filter we're going to look at is the NR7 or narrow range 7. And it indicates the narrowest range day of the last 7 days. So the NR7 is basically the tightest or smallest range that a day has made, again, in the last 7 days. As we know, compression often leads to expansion. And this is exactly why the NR7 works. The NR7 days usually indicate low volatility and indecision in the market. The following day, however, when traders finally commit, that tension is released and traders jump in on a move very early in the day, and that day tends to lead to a breakout. So for example, say the GBP USD has been volatile all week, then suddenly prints a tiny candle on Thursday, which is the smallest range in 7 days. Friday opens with a news release. What you'll do is bracket the 15-minute range at the open, and then you would watch for the break. And we find that this does work most of the time, but again, you want to manage your risk very carefully when using this filter and when using the ORB in general. The next filter, which I find particularly powerful, is looking at the context on the daily chart. So before using the ORB, you're going to ask yourself, what is the big picture actually telling you? The best and the most powerful ORB trades generally align with the daily chart. So here's what you're going to look for. You're going to look for bullish engulfing candles, which will show you that momentum is shifting. You could look for breakouts from trend lines or patterns, or flags and pullbacks, for example, which show you that structure is changing or that the trend is continuing. Then you could look at high volume gaps or overnight strength, and you'll find a story there too. And why this works is that you're using the ORB as a precision entry on a structure that was already setting up. For example, let's say that Apple has been building energy for 2 weeks. The price is coiled inside a falling wedge pattern on the daily chart. On Tuesday, it breaks above the wedge with a strong candle closing near the highs on above average volume. The next morning, Apple opens slightly higher, but trades sideways for the first 15 minutes, forming a tight, narrow intraday range. you bracket that range. At minute 16, price breaks above the opening range, volume ticks up, and you go long. Because you've aligned your trade with the breakouts on the daily chart, you're not just chasing momentum, you're riding a move with real structure, higher time frame confirmation, and fresh institutional interest behind it. And what I find is when you align your trades with the broader trend, those are the times when ORB works the best. And our last filter, and it's something that's really been affecting a lot of traders lately, is pre-market sentiment or catalysts. So this filter is basically about news and narrative. Is there a reason that the market is moving today? So here you're going to look for scheduled events. For example, Fed meetings, CPI or NFP data, and earnings releases. And you're also going to look for unscheduled catalysts, surprise headlines like Trump tweeting on Truth Social, geopolitical shocks, or overnight moves in related assets. Why does this work? Well, often news brings volatility, but the ORB allows you to capture the momentum once it gets going and once it's made its direction clear. Now, there are some common mistakes that you can make when trading the ORB, even when you're using these filters. So number one is not using a buffer on your breakouts. Always add a buffer, because sometimes you'll find that the price moves very strongly in one direction only to reverse, causing a fake out. And often a fake out means that the price is going to move very strongly in the other direction. So just be very aware, especially if you've seen a range forming before this. Next, you don't want to be chasing late moves. ORBs are most powerful in the first hour of the opening range. Later breakouts often fade, and trades too late in the trading session often go nowhere as well. And thirdly, ignoring the context. If you're seeing on the higher time frames that the charts are doing something different to what you're seeing the ORB doing, then you might want to stay out of the trade. So used correctly, the ORB can give you really good moves with early entries, but only when used under the right market conditions. Thank you so much for watching. If you found this video helpful, please remember to like our video, and please remember to comment in the comment section below and subscribe if you're not already subscribed to our channel. Thanks so much, and I'll see you in the next video.